All right, welcome back. This is step number two in creating your tax strategy. Hopefully, you've already created your vision, and now we're going to move on to the second step. Now, let me ask you this question. Didn't it feel good? Weren't you getting excited about the vision that you have for your business? Man, I know I love this. I get excited anytime I start thinking about the world's most successful accounting organization, helping people to account for their life and their business. Today, we're really focused in on your business. Now, the life part is where we really get into like asset protection and, we get into your wealth. But we're not getting into that right now. We're just talking about tax strategy, which will filter into your wealth strategy at some point. So, the last video, we talked about your vision. So the vision is the first step. The second step, what is that going to be? Now it's creating a map. A map. What's a map? Well, think about it like this. You have a name and you have a social security number. That makes you a person. Like that makes you a citizen, or that makes you a part of this country. Now, your business is the same way, right? Your business, you're going to need a business structure. We have to create a map of what that structure looks like, right? Think about it. We got to create a map what the structure looks like. So the structure of your business is everything. Are you going to have partners? Is this company going to go public? Is this company going to be mostly family? Is this company going to have employees? Like, is this company going to do business in multiple states? Like, do you want people to easily be able to find out who owns the company? Do you want to be anonymous? There's a lot of nuances when it comes to building your map. We could even call it the business structure map, right? Because we want to structure this out. Now here's the thing. We're not going to get technical in this video because remember, you're doing this yourself. You're not working with the tax strategist. You're not sitting down. They're not doing anything for you. I'm technically not doing anything for you. What I'm doing is just kind of sharing with you the process of how it works. Now, you could then know what the process is. Like, hey, I know what the vision is. I got my vision. Hey, I need to create a map, a structural map of what my tax strategy is going to look like. So even if you just know these things, you could go to your accountant, you can go to your tax person, you can say, hey, look, this is what I know. This is what I want to do. And this is how we should, and this is how we can probably do it. Now, if they are a tax strategist, then they'll say, oh, yeah, I got you covered. Now, if they're just a tax preparer, it may be a little foreign to them. So make sure you know the difference between a tax preparer, somebody who basically just helps you with the compliance, and someone who actually can help you with strategy. And so here's the situation with the map. When you go set up an LLC, listen, don't go setting up no LLCs. Don't go setting up no companies before you understand what this map is going to look like. Well, but I started a business. I'm going to start a business. I'm going to set up an LLC. That's what they said. Yeah, you should set up an LLC, but wait. Is this at some point, is this LLC going to own a building, or is this LLC going to have a lot of large equipment that costs a lot of money, right? Is this LLC going to have a name or a trademark or a copyright or something like that? A lot of times, well, not necessarily, but if you got a name, you probably got a trademark, but most people don't do it. But I'm just saying, you got to think about these things. Are we going to have these things? How can we structure this thing out? Is this company going to be service-based or product-based or both? Now, here's the thing. If you have a service-based business, you have one LLC for the service-based business, right? What if you start selling products? Create a separate entity. So I'm telling you how the map goes. You got your service-based, one entity. You got your product, second entity. You've got all your naming conventions and your webs, the web domains, and you may not have a copyright or trademark, but you're going to have to get them. You've got that. Those are three different entities. You've got service-based, product-based, and then all your IP, intellectual property. Then from there, we talked about the assets. We talked about all the big equipment and the building that this company may buy. Oh, you need another entity for that. And now we'll talk more about that in the on the wealth side. I'm not going to get into the nuances of what that is, but I'm giving you a high level view of just how these how like you should probably have multiple entities. Then so we got service based, we got product, we got intellectual property, which is your trademarks and copyrights, your name, your slogans. We've got those properties that you may own. What else? What else is there? Are you going to have any investments? Is the company going to have investments? Right? Those may want to be separated as well. What else? Jay, this is a man, these are a lot of entities. How many entities is that? That's like 5 entities. Oh, and we forgot one. The one above it is called a holding company. And we'll probably have something to kind of help you to see this as a supplement. But right now, just take in what I'm saying, right? Now you've got 6 entities. Think about this. What if you only had one? What if you only had one and you went and started it? What could potentially happen if you get sued? Oh, you could lose everything. So now we're not talking about asset protection, which part of the entity mapping is asset protection, and we'll get into that in a subsequent video. But I'm just giving you a very high level view. We'll do a subsequent video to lay out how it all looks so that you could then see it. But today, I just want you to say to yourself, "Wow, how many components? How many components does my business have?" Because a lot of times we try and throw everything into one business, and that's not always the best thing. What about last entity? What about your family? Maybe you got young kids, you got a wife, she may work a job, you know just family stuff. Like, think of all the family expenses you have. What if there's an entity that you can use so that you can start deducting all your family stuff? You need an entity for that. So we're talking about 6 or 7 entities here. And here's the thing. This is all about mapping it out. It's about mapping it out. So I know this is high level and some of you are getting it, but here's the thing. There's still nothing for you to do yet. There's nothing for you to do except you're in the planning stage. You're looking to a strategy doesn't get implemented until after the strategy has been realized. So you're in the realization phase. We just went through step 1 and step 2. Step 3 coming up. Make sure you buckle up, because there's a lot of things that we have to do in order to make sure that this strategy is going to protect you and give you all of the benefits that I know you want when it comes to taxes. So guys, I appreciate you for joining me in this video. I will see you on the next one. Peace.